Hello and welcome to another Ticks and Trades daily recap. Today is Wednesday, January 29, 2025. I'm Sam Morton. You are looking at a daily chart of the SPY, and we'll dig into this chart a little later to talk about where they might be headed next. Here is a quick look at the daily levels that were sent out this morning before the opening bell. You're welcome to pause the video and read through the game plan for the day if you'd like. Each morning, I'm operating on the assumption that the subscribers receiving these daily levels each morning have already watched the previous day's recap on the YouTube channel. When you have the previous day's info to go on, it should make the morning game plan make more sense. Now we're beyond the closing bell. It is 6:30 almost, and here's what the price action in the SPY looks like now. You might recall that we talked yesterday about a range that was constrained by the high of an important breakdown candle and a low defined by a trend line. So these levels shown in the sort of the teal blue colors are those ranges. I had another level up here, kind of created a zone. Let's say you chose to trade the futures this morning with the understanding that participating in the market starting at 2 p.m. Eastern would bring more risk because of the FOMC announcement. As it turned out, the levels would have still worked after that time, but we're going to examine the trades before then that were viable per the rules of the strategy we use. The first trade wasn't until 11:43 a.m. right here when the spiders hit the trend line for the first time. You could have squeezed out 8 or more points here, definitely a base hit. That's what we're going to call our first official trade. The second official trade was down here at this level of 660. By the way, this morning I considered adding a level down at 600 even and calling this whole area a zone. Just the fact that 600 is a big important price in the SPY is enough for a bull-bear battle to be fought in that area. It's just likely, even if there was nothing else going for that level, at least using the analysis techniques that I use. But anyway, a quick base hit from 660 and a bounce up right there regardless. And so while price did hit the underside of this trend line a few times and pulled away, and generally that kind of behavior would have given you a trade or two, but I just want to see more time go by before attempting what I call a recycle trade, trading the same level on the other side. At this point, with a bounce off of that 600 area in the SPY, the bulls could have just as easily been able to push price up a lot more from there. If you pay attention to this kind of behavior, you'll see that when a level gets revisited from the other side fairly quickly like this, the odds can be decreased that the level will work for a recycle trade. Usually it's better if more time goes by and other factors are present as well before attempting a recycle trade. But net, no more trades at the trend line for the rest of the day. After 2 p.m., I'm not going to take trades anyway on FOMC days. I really want to be out of the futures market for my intraday trades by 1:30 p.m. or so at the latest. So all of this back and forth here after and around 2 p.m. is irrelevant to me. It does serve as confirmation that the levels were still important by the way price reacted the rest of the open session. And check out where SPY closed the day, right on the top of that trend level, 601.80 or so. That should say something about the importance of these things. Here's something else too. There's a reason I believe that price bounced right here around 602.50 or so, about 14 or 15 minutes after the open. This trend line here is from daily highs, as we drew on the chart yesterday. When we zoom out on this daily chart, you can see the anchor points of this trend line, the high over here on December 6, and then the high on December 16. It was important a few other times. So where price intersected this trend line today proved to still be important, as we've already seen. But check out the difference on a 60-minute chart. So here's the trend line from the daily data. If I plot a trend line from the high on this hourly, you get a slightly higher trend line. See? Make that a different color, just confirming that the anchor points are at the right area. High is 609.07, 607.78. There we go. So that's correct. Now let's go back to a 1-minute chart. So here's our new trend line, the magenta line, not hard to see how this other trend line, based on the pivot highs on the hourly chart of those same 2 days, created a tradable level today, more than once. I didn't use this trend line this morning because typically longer term data is more important, so I went with the one from the daily chart. It's cool to see how this other one was important as well, several times. And while I did not take any trades today, I did fire up the screens about 20 minutes or so before 2 p.m. and recorded the price activity so I'd have a record of it. I just wanted to see how or if price would still react to my levels, even if volatility picked up a lot. They really didn't move as much as I expected at and after the FOMC announcement, and this chart is kind of squeezed together, so the reactions really might not be so obvious, but it should be pretty clear that the levels do work the majority of the time. I'll just scrub ahead here. No trades, but interesting to see with this kind of granularity how much the levels worked throughout the day, even after the FOMC announcement. Back on the daily chart, I went ahead and added back the high of this breakdown candle and the trend line. They were in between it yesterday at the close, in between it most of the day today. You saw them get under it, bounce off of 600, but they closed right at it. So really not conclusive, looks somewhat weak, but we could still have something going on tomorrow. I still maintain that if they get above the high of this, the bulls are in charge. If they get below and stay below for a period of time, then the bears have a better chance of pushing price down. So this little hourly chart here, so the time it took them to kind of have this little run down and then this pretty good sized hourly reversal candle is actually a pretty classic sign of a trend change. Then you have a retracement of that roughly. They're setting up probably to bounce from this area without really considering anything else. That's what I'm seeing on this hourly chart. In the post, they've already pulled up a little bit. So maybe this is a good opportunity to buy. But anyway, this is at what time? This is 6:41 p.m. right now. Come back in a few hours and see what the overnight session is doing. Once again, a little bit of a run here, reversal candle, retracement. Good time to go long here. Going long where they're at now against the low of this means there's your risk. You wouldn't know you're wrong until they close hourly candles below this. But anyway, I'm kind of getting to the weeds a little bit. So it could be that the bulls are going to have another run tomorrow. We'll have a better idea by tomorrow morning. And here are the tracking logs, playing by the rules log, 8 points. And the note here, it says trend line at 601.95. That's right about where the trend line was at that point in time. It's a little bit variable because it moves throughout the day. So that's the playing by the rules log, and then Sam's trades, no trades taken. And because of my little give back the other day, my rate of return has dropped 15.6%. You've seen the outcome of all these trades. Only a 72% win ratio, but almost 16% for the month of January only is nothing to scoff at. So that's a wrap for today. Thanks for watching. I hope you found some value in what we went over. I'll be back in the driver's seat tomorrow. Plan to make some trades if I have time. And of course, there will be levels sent out to those of you on my list. Go to ticksandtrades.com, click Learn, fill this form out right here, and sign up. And you will receive an email with the daily levels and the game plan for the day before the opening bell. Talk to you in the next recap video. Have a great rest of your day.